signs, and I'd like to see put call ratio decline. If it does decline, it's another sign that we need to be extremely cautious in markets at this stage. Copper also has had another day down on it. Now we know that Dr. Copper is something we're watching over here in January. I kind of called the high for copper. We've seen it kind of struggling around. I didn't like what it did here, but it ended up holding the weekly down, which is really, really nice. So you can see here the weekly did not manage to bust through that 4.1261. So we have to assume that copper is still negative at this stage. And if it does start to fall away, that's showing us the world economy in general is weak. So remember, copper traders usually sniff it out pretty fast. If they don't like what they see, you should see it reflected here, and it's another not good sign for the markets. Another point of contention will be things like high yield junk bonds. We haven't seen them recovering with the market recently. If these continue to drop off and the market keeps going up, bad sign, yeah? So it's just not a positive sign, and we need to be watching that as closely as we can. Let's have a look at the US dollar. So it found that recovery up into this area. So we've seen now a declining trend line that held this market back in terms of the US dollar. Most articles now are saying the dollar's under fire, the dollar's getting destroyed, all these types of things. Look, it's also about yields. I mean, we've seen yields switch to being a bit more positive in the last couple of days, thanks to every economist in the world now believing we're getting a 25 basis point hike. That strengthened the dollar as well, plus it was probably oversold. And we're back now in this supply. So if you're going to be a dollar seller, somewhere in here is theoretically where you should start to see some selling. We're looking for it. We haven't seen it yet, but this was certainly one of our highlighted zones on the weekend video, and we're here right now. So what I'm really looking for is jumping into the small time frames, and basically you're kind of looking for a switch. So there's a small switch that's just occurred. You could get a rally into London, maybe pushing through something like 101875 and then maybe even further sell-offs. I would like to see more. I wouldn't even mind something like that, and that would show us further weakness in the dollar. And not necessarily one over either way. We're just looking for, of course, the reaction, and we haven't got that just yet. Now, we did see some strong or nice kind of moves on gold. Gold fell down to one of our loved levels, which is down here, that 1980, between 1980 and 1975. So this is where we've liked gold. If you're actually a bull on gold, you now need this thing above 2015. So if it takes out this previous high, that's going to be a super positive sign for gold, at least for now. What you don't want gold to do is go back under this zone and not find instant buyers. In here, there are buyers. That's where the demand has been. We've talked about it now for quite some period of time. If gold struggles through there, and let's say dollar index continues to bust higher, maybe it breaks our trend line down, all sorts of things like that, then gold will most likely go into more sideways action, distribution, similar to what we've seen. Remember, weekly did not hold above. We talked about the data stats that do not look positive for gold right now, although I am a gold bull over the next coming years. I just think that this could be a struggling point for it, and it makes sense. Everybody's on the trade. Remember, we were on the trade over here a long time ago talking about it. And we obviously were super bullish on gold back in the late last year. So, I'm super bull on gold generally. I just think that it's coming to, a very big point here. And you've got a high at the moment. You have a low, you have a higher high. We're looking for that lower low if you're a bear, and then maybe pullbacks into, some distribution. So be careful here on this one. Weekly closes will be key, and we haven't seen it yet. Now, our natural gas moves have been pretty good recently. We have seen those lows being taken several times. That's led to a slingshot. We've been bullish on it on the bottom here. It is the Widowmaker. Remember, it moves a hell of a lot per day. But let's take a look at this on the weekly. It's a fairly significant move out here if it can hold this week. And if we go to the 2 hour, I wouldn't be surprised at all to feel something like this gap in here. However, I do think bulls have returned at this stage to natural gas. It's pretty heavily sold off. And this steel here and this steel here were pretty nasty. So I'm sure they made a few people sad-faced because they would have taken those positions off them. But yeah, look, natural gas, we had an aim for 2.461. It's pretty close now. I'd like to see it continue its base and maybe move down and then up like that. That would be kind of an ideal thing here for natural gas. Nice move. Let's look at oil. Now, I don't want to say anything in particular, but well done, guys. I put here a line in the scalp zone. And obviously we updated that, and you can see what happened here. It came right down to that level and actually found instant buyers. Now, we did expect buyers in this zone here, so that's not surprising. Let's take a look at the smaller price action. Oil is kind of doing what we expected. It needs to find buyers right in this zone though. So if we go to the daily, this will look like a massive breakout to a lot. And of course it is. It's higher than all these points. But we've got to be very, very cautious. If you're actually feeling like you want to go short on oil, there could be an amazing swing trade coming up where basically we look for lower low and then more of a turn towards the short side, something like that. This level is super paramount that the bulls hold it. So the bulls must hold here. This makes the most amount of sense to see buyers recommence. And I think a lot of people understand why. They've been following the channel for a while. So far, so good. This is the right type of switch that we've seen. And I'd like to see buyers recommence here in oil, at least temporarily. What would the targets be? I think it's pretty clear this is a key zone with a nice level of supply. So, for scalpers, they're probably looking at, trying to get it back into this 82 zone or 81.80 to 82. These are the previous supports, and you can see kind of where those buyers might kind of lose some faith in oil. Nice trading though, and it's good to see a zone that we've marked out on these charts together getting hit so perfectly. Tesla coming into earnings, I got to say that is neutral as neutral can be. The markets have not given us anything. They're not giving us any edge. Look at this, even a long leg doji on Tesla. So we've got high level extremes. We have the low level stop loss extremes. If you're a Tesla buyer, you're kind of looking for to go take this level and find instant buyers. If it does, that's probably done some stop loss hunting. If it has done stop loss hunting, that's a good sign for you as a buyer after earnings. So of course, reaction is better. The markets are expecting quite a big range here, as we saw on that chart before. So we know that Tesla's expected to have a fairly volatile earnings report. We also have the top end here where rallies might be faded back off. So you've got to be careful here at just around 195 to 200 will be critical. And then I like this low here, which was being demanded a lot. So if the markets go underneath and instantly bounce, that's something I'm looking for. If markets end up closing below, it probably means rallies will be met by more sell demand, and we might finally get that 145 that we've been looking for a little while after it went past 210 plus. What about the options? Not much to go off here. It is third week options expiration. Just remember, we've got a lot of 200s and a lot of 150s. So everything in here is fair game, at least how I see it here from the options charts. Let's move over to some other stocks leading into earnings. I mean, Apple has been the one that has always rallied. It's always rallied, and it's always come to this trend line throughout 2022, and this is where it has failed. Now, we've seen different types of turnarounds. We've had double tops, similar to this one. We've had kind of like a gap down and then a fill of that gap, and then it just sells off completely. But this trend line has stopped everything in its tracks. So I think Apple is something of interest. We don't have any turn story. The trend is still up at this stage. It is just waiting and seeing. There's nothing we can do there. CQQQ, so this is the Chinese technology stocks. You can see they're actually a lot better looking from a investor standpoint, theoretically, than maybe the American stocks at the moment. But we find ourselves in some nice chop. It's come back to probably about a 50 or a 61.8 of that low. So maybe there's some buyers here, but at this stage, nothing much. Most people are just seeing it as an inverse head and shoulders. I don't disagree with them. 52 will be a critical level moving forward. If that breaches, then it should be, more positive, I guess, on this chart. We've seen, of course, XLC not doing so well. So let's actually load up that and we'll look at that one. You can see there's semiconductors. Look at where XLC is. Communications have come straight into this high. So if we drew a little box here, which we'll do together right now, we need to get a box, guys. There we go. And if we just draw a little box there, you can see these highs and what's happened in the past. Look at the critical zone we find ourselves at, right into earnings. No surprise, we're at all of these tight zones. So this area here, if we breach up, then we probably are looking for further rallies, though I'll be looking at the indices overall from doing it. But XLC's kind of started to slow down. It's no longer leading the market with technology and the others. If you look at the Dow, the DAX here, if we go and have a look at the DAX, you can see the long leg doji. It's reached up as high as 15.9. I kind of suspected we would go somewhere around 15.9, 16,000 was my kind of call. I thought we'd get somewhere up in here, but anything in here is certainly still resistance. It's a clear breakout. Weekly still look really good, but we're coming into these highs. And you'd say, what recession, what problem? This thing has come back like an animal, like is come back very strongly. And you can see here what happened October all the way. You might think the US has done well, but when you compare it to these markets, you're up 33.6% off the bottom. So the DAX, the France 40, the FTSE, all of those markets have done quite well. The Australian market, for the Australian viewers out there, remains at these highs, waiting for probably more US information. If copper continues to fall off, don't expect the Australian market to do well. However, it is right at these highs now. So nothing to be determined here. The trend is currently up. You wouldn't necessarily be scared of it yet, but we're waiting and seeing. So trend is up, looks okay. Let's move over here to the Qs. The Qs have not taken the high. While the S&P is kind of flirting with higher highs recently, the Qs instantly got up and then started to consolidate. Now, let's just think about conspiracy thoughts process here of what Wall Street might want to do. They pushed the Qs up quickly, not allowing as many retail traders as they would want, as people would want, or retail traders would want to get in. They move the algos quickly. Then they create, now it could be accumulation or it could be distribution. So if you think about this as distribution, let's say we now took that high and did that. Do you know how many people would be rallied in and have bought in this area? It's spent almost more time in this area now than it has in the entire rally. So basically there's going to be a lot of retail traders buying these dips, buying these 0.3% moves, and then they're not used to necessarily, the 3-4% that we've seen before. So remember, it's to be determined, basically. We don't know whether it's distribution or accumulation yet, but if we do breach out and we get closes, remember close is the key in this case, then we're moving towards these highs, probably looking at taking those out. So the Qs sit at a pretty critical level. We're looking at it. Let's move over to the US 2000. I want to just look at this. You can see here, not the 3000, but the 2000 is fast approaching the critical zone again of 1800 or 18,000 and 1810. So 1810 is a zone that we've seen plenty of sell-offs from. It's coming back. It's shown us some weakness here, but it keeps just buying that last hour. Like the last hour just keeps rallying up. You can see here the rally that comes through in the last 2 hours here. And yeah, it just keeps doing it. It's making serious high lows. Maybe it's looking to breach. That could play into the idea that it's a Wyckoff accumulation. It's all happening. We're right at these zones. I think we'll find out very, very soon. US 100 futures, you can see the kind of up, down, up, down, up, down, up, down. We thought we'd find weakness in the previous session. We did for most of the day and then just rallied that whole thing back. Again, watching reactions up here. If you're a scalper, you're going to want to mark all of that in your charts. And if you're a day trader or swing or anything like that, you're probably waiting more to see the next move. Unfortunately, it's boring, but there's been other market moves. Currencies have done well. Gold's obviously moved. Dollar's starting to move again. So there's always another opportunity. Let's have a look at the SPY. We can see here the SPY is still stuck within long leg doji, the high and the low. SPX will show the same thing. Now, somebody's mentioned before in our Discord room that supposedly there's like an average amount of time that's been taking from the bottom to the highs. So we're looking at like 43 kind of days. And those rallies seem to be fairly, consistent. So about 40 to 43 days on the up, on the down. And if we actually mark out from the bottom to the high right now, we're only sitting on 35, 36. So maybe we've got a couple more days of stuffing around. But yeah, it seems like anywhere between that 40, 43 days, a few people have looked at all of these rallies recently and they've kind of marked that out. Is that anything to take from? Probably not, but something that is interesting. Downward trend line still intact. Maybe you could say that's a little breach in the last 24 hours, but still no new higher high. We know 4180 close will be significant on the S&P 500. So we go over here to the futures, and this is where we thought would sell off on the weekend video. We saw the sell in the morning, and then just boom, that last 2 hours. Look at that thing, just straight back. The animal spirit of the bulls. You guys just V-shape every drop. If that doesn't hold though, imagine if we go like this underneath that one, all of a sudden we're starting to look very negative. And of course, we know that 4068 is the true problem for the markets because we have that trend line that comes through. We have extensions that sit in there. We have the lows that were formed previously